The market is closed and the numbers are in. Let's take a look at the closing numbers again. 61.59, down by half of 1%. Value turnover 4.7 billion. Decliners beating advancers 107 to 84. For context and perspective and what's underneath these headline numbers, let's bring in John Carlo Lim, co-founder and CEO of Dragonfly Securities. JC, welcome finally in the flesh to the studio. Hi.
Yeah, hi Mimi. It's great to finally meet you in person.
All right. So let's start with the big picture. Is it time to come out with a new bullish call? Do you think this index is ripe for a big rebound considering we're cheap? That's what everybody says.
Yeah, I do believe the index is cheap, not just from a plain valuation perspective, but from a tangible perspective, dividend yield. And as a matter of fact, I don't think the indices are representative of the fertile environment that I've been experiencing over the past 2 years. I manage a dividend fund for my clients in Dragonfly, and it was up 24% last year, and it's up double digits this year. And you can see that, even though I had that broad macro view of the PSEi correcting, it actually was not deterrent to performance.
So there are lots of opportunities in this market.
Lots of opportunities in this market.
Are we in a sell-off?
No, I don't think so. Worst case scenario, I feel we're range bound. But I've heard some of your guests speak about 2016 to 2018 as being the proper analog, but I actually take a different tack to that. In 2018, so the PSEi actually reached an all-time high of 9,078. I'm sure you remember
Feels
that.
Like a lifetime ago.
Feels like a lifetime ago, right? From 9,078. It corrected from peak to trough. It corrected 25%. But within that correction, there was actually 8 to 9 small corrections between 5 to 11%. So as you can see, then the PSEi ended up down 17% for the year. So volatility was really the norm in 2018. And the U.S. markets also did the same thing. Actually, we moved in lockstep with the U.S. markets. The U.S. markets had 8 corrections of 5 to 15%, 4 of which were between 10 to 15%. But it ended up just down 5%. So I don't think that 2018 is the right benchmark for the current environment. Why? So in 2018, at that 9,078 high, the trailing PE of the PSEi was actually around 22. Right now, you're looking at the trailing PE of 10.5 to 11. So it's, as you mentioned, as you correctly pointed out, the PSEi is extremely cheap. Secondly, in 2018, we had our own domestic issues. So the trifecta of like the excise tax for sugary drinks as part of the train law, labor wage price spike, and rice and fuel prices were also high. By the third quarter of 2018, the CPI was up 6% year over year. So now we have the opposite situation wherein inflation is actually controlled within the 2 to 4% BSP target range. So I don't think that 2018 is representative of 2025.
All right, so what's representative of 2025? This time we're living in, the markets we're trading in, what does it remind you of? Is there a specific time period?
It's
or it's unique in its own
unique in its own right. It's unique in its own right. So but
JC, you do think that second half is going to be better than first half?
Yes, I do think that the second half it will be better than the first half.
What do you need to see to be convinced?
So right now, it was always well telegraphed that the tariff talk would be in sequence would be the primary mode of engagement of the new Trump administration. Why? Because any tax cuts needs actually budget reconciliation in terms of revenue. So the Trump administration is trying to use tariffs as an offset for future tax cuts. So we always knew that it was going to be the case, that come 2025, Trump was going to promote heavily his trade policies. The issue with that is it's going to take time for the budget reconciliation to play out. The estimates are between August and September before Congress can make that budget reconciliation work. Because in essence, if you were to avoid the 60-vote filibuster, you need a 10-year period wherein the budget is budget neutral. You can't increase the budget deficit. So that's why you see Doge trying to be aggressive. You see, Trump being very, shall we say, aggressive when it comes to tariffs. It's on account of the fact that he needs the offsets.
So, JC, everyone's talking about the tariffs. It's in the headlines almost every day, changing almost every day well. And as the April 2 deadline approaches, I wonder, in a more direct way, to publicly listed companies here, are you now inclined to do earnings revisions for publicly listed companies who might take a more direct hit or benefit from those tariffs?
I've always been of the opinion that the tariffs per se, let's say we're talking about reciprocal tariffs, right? There's only a less than 2 percentage point difference between on average, what we charge the U.S. versus what the U.S. charges the Philippines. Well, it's countries.
So we're very small.
Yes. As a matter of fact, yesterday, the Trump administration laid out the dirty 15.
The dirty 15. But that's maybe not directly affecting the Philippines, but the supply chains are very global now, so it might affect somebody in the supply chain that will affect production for Philippine companies.
Correct. I feel it will benefit us indirectly. So imagine if the U.S. is aggressively taxing the importation coming from these countries. What do you expect these countries to do? You expect them to find alternate trade partners. And in that case, I believe the Philippines will be importing deflation because these trading partners will actually have excess production capacities that they need to offload somewhere in order to keep their economy on track, right? So I believe that they'll be exporting deflation, so we won't be importing inflation. It's deflationary for our purpose. It's inflationary for the U.S.'s purpose.
Do you have a Trump trade? Are there names? Do you have a basket that you'd consider big beneficiaries of Trump 2.0?
Yeah. So actually, prior to its dividend announcement, I told clients to buy ICT because ICT is misunderstood. Misunderstood in the way that people think that on account of tariffs, ICT it's detrimental to ICT's prospects.
Because they're the port operator, global trade will definitely impact them. Why don't you think so?
But in reality, if you see the strategy of ICT, it's like a home and away strategy wherein they have the ports at home and internationally. If you have that situation, actually, ICT benefits from a fragmented trading environment versus, let's say, a wholesale trading environment that everything is routed through China or the different countries that are such as Thailand and Mexico.
So now I know you like ICT. Final question. So you do like dividend-paying stocks as well?
Yep.
Stocks that pay to wait. Final question. You started offering Pera, right?
Yes.
How's the reception?
So Pera, actually, we're integrating with the BSP right now because we are integrating with the APIs of the BSP.
Right.
But having said that, the reception has been so great.
Really?
I have companies reaching out to me wanting to offer Pera to their employees because there's that tax advantage nature of Pera. If you incorporate Pera as part of the employee's compensation package, you take away the marginal tax rate of that employee pertaining to the 200,000 peso contribution. So you can actually save up to 70 to 80,000 pesos a year in taxes if you incorporate Pera into your total compensation package.
All right. Final question, JC. What's the advice to those watching us? How do they make their money grow this year?
This year, can I name my best pick for the year?
Go ahead.
So my best pick for the year is Globe. Why? So you're paid to wait with a 4.6% dividend, and you have the value of GCash accruing within Globe. I experienced this before, so I trade the U.S. markets heavily as well. I bought eBay in anticipation of the Alipay IPO, and it was doing so well. I had a huge paper profit until Jack Ma disappeared, mysteriously disappeared, right? So
well, now he's back.
Now he's back. But you don't have that situation in Globe. And in Globe, right, so the previous year, GCash was valued at 2.5 billion. Then it was valued, by August, it was valued at 5.5 billion. Now they're saying they want to IPO at 8 billion. So imagine how that's accruing to the value of Globe itself. So you have the 4.6% dividend yield plus the potential upside of the IPO.
All right. On that note, JC, pleasure speak with you. Thank you so much for the insights and for the trading tips that you gave us and our viewers. We'll see you soon.
Thank you, Mimi. Happy to be here.